All right, guys. Just doing a weekly recap from last week. This was a Thursday trade opening, so we have you guys can clearly see one of the 1 minute time frame, and we're simply just ranging here, right? So you guys see the accumulation, right? So there's two ways of going with when it comes to PO3. Price action accumulates, manipulates up, and then drops, or price action accumulates, manipulates down, and pushes back up. Your way to enter is at the lows, right? That's where you want to enter with price action. So in this case scenario, you guys could clearly see we have accumulation, we have manipulation, right? You guys could see we have the manipulation high with a bearish CISD. The last upward candle is being engulfed by the next candlestick, and all we need confirmation is we need a bullish fair value gap to be disrespected, and we have a bearish CISD. So we have two things. This is a high probability setup, and I believe I announced this while we were on live. I saw the PO3, I called it out. So with being confident, take the sell. You take the sell position. Stop loss is at the high, and then TP could be either the accumulation zone or even to this TP down here. Um, so of course you could take it as you see fit. You could always trail. So I'm gonna let this play out, right? So you guys could see how much profit, like you guys could see that it's going down, so you could now take profit all of it, or you could secure it all the way down here if you like. But most of the time what I tell people is take the profit as you see fit, whatever you're comfortable with, right? Let me see this again. So right here I would sell out before this candle comes in, so I would have closed this position. So that's the PO3: accumulation, manipulation. You have the inversion fair value gap with the bearish engulf, and then boom, PO3 played out. Boom, we're done, right? So now let's say to catch this reversal, right? You guys also learned the neckline model from me. So the neckline model consists of a W or M pattern. So it could be like this, right? Engulf here, and then you're looking for an entry to push back up, or it could be the M model, right? Where its support is tested but broken here, and then it pushes down lower. So in this case scenario, you guys could clearly see that we have a W, right? Which means it's bullish. So you could see clearly this is the high, right? We have the W, right? We have the W, you guys could see. We have the push up and then push back, and then we should have it push back up, right? So you guys could see we closed right here on this candlestick. We closed right on that gap right here, right? We closed above. I'm looking for a long here. My stop loss is at the low, and TP could be at this high or at the high of these candle wicks. Each one of these push up or liquidity. So I could target this relative high that I want. So it's a one-to-one trade right here. Boom, done, right? That's it. So those are the two main trades, and of course we scalp throughout the rest of the day. So you got a PO3 and you got a neckline model within the same time frame, right? In the 1 minute chart, and you got it in the same time. So this is how you're able to spot from the PO3 to getting out of the position, because look, you had the closure above. You should try to exit your position before it stops you out, right? So that's one way. Um, Now let's go to this week. This was I believe a Wednesday if I'm not mistaken. So we could see that there's like another PO3 here, right? So you guys could see price action now, same exact thing, accumulating, right? Manipulation at the high. Of course, there's no bearish CISD, right? Well, this was the last upward candle. Technically, there is a bearish engulfing, but I would like to see more candles going down. So in this case scenario, I'm going to use this bullish fair value gap that's here. I'm going to wait for it to be disrespected so I could take this short. So you see it's testing, testing. Okay, boom. I got the closure here. Okay, I got the closure here. I'm taking a sell. Stop loss at the high of the manipulation, which is right here, this candle. TPs. Now TPs are liquidity zones. So liquidity is here, right? The wicks, right? Liquidity is here. And there's also the major liquidity down here. This would be usually where I would target the final liquidity right here. So I'm gonna set my TP down here. I could get my point system so you guys could see better. Whichever way works, right? So we're gonna take this short. We're gonna play this out. Should be confident in this trade. I think it should drop a lot more. So as it's dropping, I'm bringing my stop. Well, you guys already seen that. I already took it. But as it was dropping, I would have brought my stop loss that was already here. I would have brought the stop loss down as it kept dropping. So that's a simple way of how you catch the PO3 down here. All right, so that's another PO3. So now the neckline model, you guys, as you guys saw in the previous section, you guys could always replay this video back, but you guys saw where I showed you guys the W, and now I'm going to show you the M, right? So you saw the W on the previous first section. Now I'm going to show you how to find the M on the second section right here. So in this case scenario, you guys could clearly see we have what do you let's do this replay. You guys could clearly see we have an M model right here, right? I believe there was an SMT as well, but this is also an M, right? So what we're expecting is support to break here. So what that means simply is we would like support to break here, and coincidentally that support is next to a fair value gap, which is right here. So this fair value gap is the support, which is also support for the M. So once this breaks out, I'm looking for a short opportunity to at least target these liquidities right here at the 9:30 opening. Okay, so you guys can see we have the break right here. I'm taking a sell. Stop loss at the high. TPs to the lows right here, right? This is liquidities. These are all liquidity points. We shall let this trade go out. Well, it was very close. But what I would normally do in this case is I would trail into profit as it's going down. You see, as it's going down, behind each candle, I would trail this into profit. Let's see what happens. This is what happens if you don't sell. This is where they talk about the greeds, right? If you didn't sell or take profit, I believe this was around like a good amount, chunks amount of points here. So if you did not sell, of course you would be caught up in this. But like I'm saying, this is a great opportunity for scalping your positions in and out, right? You scalp. This is about like what, 111 points. So of course you're going to be selling. A lot of people will sell around like 70, 80, or even 40, 50 points and take their profit. So like what I would do in this case scenario is usually bring my stop loss as it's dropping into profit behind each candle wick, right? Behind each candle wick, keep dropping until I get stopped out. That's it. Let's see if I can find the other trades I've done. Look at this, right? Look at this, another PO3 right before New York session open. You have accumulation, right? The manipulation is this high, right? And now you're looking for either a bullish, a way to enter is a market structure shift, meaning below this level. There's no bullish fair value gap or anything. So below this level, which also inside this accumulation zone is a fair value gap right here, which I would like to see support break. So this fair value gap right here, I would like to see a break, and I would play a short level, right? So boom, it broke out. It broke here. What I'm looking for is a short opportunity. Taking a sell here. Remember, stop loss is at the high. TPs are to the low. So there's liquidity, this pool here. There's liquidity all the way down here as well too. So you could target these levels, but like I said, take as much points as you can, as if you want to scalp, you know what I mean? So clearly accumulation, 1 minute fair value gap that's being disrespected here. Take the short, target internal liquidity, boom, PO3 model right there. Thank you guys for watching. If you have any questions, feel free to hit me in my DMs. All right.